Good evening, everyone. Time for another silver update. This is the weekly chart of silver provided by netdania.com. You can click on the link below. I've outlined a couple of key formations here. The primary formation out of the 2008 crisis was a sort of cup formation, and you could call it a falling pennant. And the current formation we're in is more of a flag pennant formation, and it seems to be rising formation. Now this could turn out to be a formation similar to this if we round down and then come back up, so that's quite possible. If we look at the MACD on the weekly, we can see that at the 2008 bottom we made a break through the zero line, and then we kind of had just a kiss of the MACD and then a turn to the positive, and that accompanied this steady rally until we had the significant breakout with QE2. At this point we're looking at a sort of kiss of the line here, very similar to this right here, but we haven't crossed up above the zero line, so that's yet to be in the future. Obviously silver is very well sold off, and is not, I would not say oversold at this point, but has pretty much stabilized and is ready to resume a rally. If you look at the overbought MACD that I showed you on Apple Computer, where the number was up around 57, you can see that silver, it has pretty much corrected. Now if you remember, very close to the May top, we had a comment by Jimmy Rogers about how he was worried about silver becoming a bubble. A lot of people quoted that at the time and said, Jimmy Rogers says silver is in a bubble. Actually, that's not what he said at the time. What he said was that if silver goes to triple digits, then he would be concerned about a serious crash in the price, because that would extend it way beyond where it should be, and that would probably presage a parabolic collapse. So I don't think this is a parabolic collapse, but this is more just a healthy consolidation, and it's a setup for another run to a higher stage. You can see that the range expansion from this run up and this run up, you can just look at the movement in the lines, the weekly movement, and you have enormous moves up in here compared to the size of these moves. Although the 2008 there were fairly large moves, here you can see a weekly move from about 17 down to about 14, another one 15 down to about 12 or so. But compared to this move here, where you get a move from about $41 all the way down to a $10 move. So clearly silver is expanding its range, and we're still moving with that volatility. You can see the spike up to 37 was much larger, even though we're consolidating still. That spike to 37 was much larger than any of the prior spikes that we have. So silver, and especially these bottom spikes here, silver is continuing to expand its range, and once this MACD crosses to the positive side, we begin to build again, then we'll expect to see a rally towards the old highs, and then another range expansion that will be as proportionally large as we had in these prior range expansions. Now I wanted to go back to the issue about Apple Computer, but before I do that, I want to take the question of the day, and this is from Travis, and he says, thanks for the site. I appreciate your hard work. I'm interested to know your thoughts on the price/value of silver in an economic collapse. In many of your videos you mentioned that in times of trouble people will flock to tangible assets like silver and gold. That being said, how can we account for the fact that in 2008 the price of silver dropped to $9? According to silverinstitute.org and others, the main usage for silver is industrial applications, and this accounts for nearly 50% of silver usage. This being the case, could we not see another drop in the silver price similar or worse to 2008? While I'm going very long on metals and I believe that silver/gold will protect my wealth, what else would you suggest I do to protect my wealth in an end of fiat situation rather than having all my eggs in one basket? Thanks. Well, it's difficult with the type of thing that we're facing. I don't really suggest that you put your eggs in a paper basket. And if we don't put our eggs in paper baskets, then that doesn't really leave a lot. Pretty much it leaves the commodities. So that not being futures contracts. So that's why gold and silver have always been money, and they still are money, although that is not something that the powers that be want you to think about. But gold first and then silver are the elements that serve those purposes the best just by their nature. Gold doesn't rust. Silver tarnishes a little bit, but pretty much they're a perfect store of wealth. There's a lot of other things that have value that you can put your money in. There's land, which has other tax and ownership consequences. Of course, there's the soft commodities. Problem is there's storage and all that stuff. There's oil. Again, that's a storage issue. So that's the reason why gold and silver have been money for thousands of years, and in my opinion will continue to be money. But I wanted to jump over to the Silver Institute and just give you an idea of why I don't think that these worries are really justified. So let's jump over to the Silver Institute, and I've gone down to the supply and demand fundamentals, and this is the total demand line, and I don't have the years, but you can see that just looking at the numbers here, I would ask you to guess which year is the year of economic collapse. So we have 877, 868, 881, 879, a little jump to 929, 923. Then we have a fall to 907, a small fall to 904, back up to 922, and then a big jump to 1056. So this is total demand for silver. Now, by looking at those numbers, one would probably guess that our economic collapse occurred from here to here, where we had a drop of about 15 to 20 or so on 15 or 20 million ounces in demand. If we scroll up and look, you can see that was 2006 to 2007. So 2008, 2009, and 2010, which was the catastrophic economic collapse, we actually just dropped 3 million ounces in 2008, and then we rose again 18, and you can see this enormous jump in 2010. So I think that pretty much proves that that theory is bogus. Now, of course, the reason that it's bogus is that it's strictly a U.S.-centric view. It's a view that if the United States economy goes into recession, then the demand for silver is going to drop drastically. The other thing we want to look at is the industrial applications, because that's the primary use, although there is a large growth in the coins use. But you can see that for the same period where we had the 907 to 904, we went from 491 to 492. So we did not drop at all during the worst financial crisis we've seen in the last 70 years. you can see the growth: 349, 355, 368, 387, 431, 452, 491, 492, and then here's your drop actually in 2009, and then a snap back right back up to where we were. So I think that the people who are making the claim that the reason that silver is going down is because of a projected economic collapse